if I had known this growing up, I think my path to wealth will be much more simpler and faster. But I didn't really have the luxury to learn about money. Our family is too busy trying to survive, like most Filipino households. We weren't taught how to build wealth. We were taught how to survive. And on our lowest point, I remember my parents told me, do your best not to end up where we are right now. Isang kahig, isang tuka. And that advice came from love, and it also taught me a really great lesson in life, that hard work isn't enough. So in this video, we'll talk about the money lessons that I wish I learned growing up. And this is also an Invest With Me video. If you're new here, my name is Ron, and welcome to Pinoy Stock Investor. Okay, starting with the market check. Right now, Dow Jones is down by negative 82%. Nasdaq is up by 1.09%. And the S&P 500 is up by 0.52%. How does that reflect to our portfolio? Currently, we are up by 0.67%, which is a little bit higher than the S&P 500, just for today. Okay, in today's video, we're going to invest $100, and let's go plug in that $100 to our investment tracker sheet. Adding that $100 right here. We are going to invest $16 on our industrial sector. Next is financial services. We are going to invest $7. To the communication services, we're going to invest $25. And for technology, we are going to invest $12.66 for each company. Okay, starting with our industrials. Okay, usually that is actually our investment in Uber. So in Uber, we are currently down for the day by 0.73%. That's about like $57.92. But in total, we are still up by $153.77. Okay, we're going to invest $16. So trade, buy. I'm going to put $16 for Uber. Okay, that is 0.196 shares of Uber. Next is financial services. We're going to invest first in Visa, which is currently down for the day by 0.91%. But we're still up by $1,035. Okay, let's go buy some Visa shares. Trade. It says here that we're going to invest $7 for each of the companies in financial sector. Right now, I feel like investing $7 for Visa. $7. And that is 0.021 shares of Visa. Next is MasterCard. Going to buy. So like I mentioned before, we're increasing our position in MasterCard. And we're going to buy $10 of MasterCard. So $10. And that is 0.019 shares of MasterCard shares. So right now, we have a total. The shares that I own in MasterCard is 11.59 shares, and the total value of it is $6,046. That's about 4% of my portfolio, and I'm trying to increase it up to 5%. One small step at a time, of course. Next, we're going to move up to communication services. And in our communication services, one of the companies, the only company that we're holding is Google. So we're going to buy, it says here that we're going to buy 25 shares of Google, but I'm feeling to buy only $20. $20, so should need also. Okay. So let's buy $20 of Google. That is 0.59 shares of Google. One of the things that we were taught early in life is to save money. But saving without an end goal is not enough. So back then, my parents only told me to save when I was a kid. Put a portion of your allowance. When I started working, put a portion of your income into savings. And granted that savings are really great advice, yeah. The thing is, in short term, it's great, but in the long run, saving is actually kind of a trap. Because imagine this. Remember when you were a kid and you bought like a candy from a store, and it cost you like what, 1 peso or 50 cents, and you get like 2 candies or 1 candy for 50 cents. I'm talking about peso because growing up I was in the Philippines, so buying those candies is really easy. And now, after several years, you can even buy 1 candy for 1 peso. I was surprised too, like, oh, the only option for me is to just buy like the whole bag. Or else it's buying like 5 pesos for like 3 candies. So yeah, that is called inflation. And inflation really reduce the value of your savings. If you're just savings, like if you're saving in a bank, if you're saving in physically on a piggy bank, or if you're saving your money, like holding on to it, inflation kills your money. And so in the short term, saving is a really great way to to start your financial journey. But after a long while, let's say a couple of years, saving it becomes a trap. The value is getting reduced by inflation, and the amount that you need to buy certain things that you're saving for is also increasing. So it's a losing battle if you're just stop at saving. Okay, so saving is really great, but saving without an end goal is not good enough. Okay, so after investing in Google, the next company that we're going to invest are one of our technology companies already, which is the highest right now, like in today's value. Apple is actually the highest company that I have on my portfolio. So we are going to invest, it says here that we're going to invest $12.66 to each of the technology company, but I don't really, this is a guide and I don't generally stick to it, like, so I'm thinking of investing about $7 for Apple. Okay, $7 to Apple. And that is 0.026 shares of Apple. Okay, next company is Microsoft. Microsoft is actually like compared to the price that it was in before, it's actually, well, I would say down, because before the highest, the 52-week high of Microsoft is 555 based on my brokerage, and the lowest is $344. So right now it's at $481. So it's about in the middle, or a bit higher than the middle. And I think it's a great time to buy more Microsoft for me. Okay, by the way, these are not special investment advice, but these is how I invest. And seek a professional if you want a professional investment advice. Okay, right now I'm going to buy $15 of Microsoft. And that's about 0.031 shares of Microsoft. Okay. Now, first, we said savings without an end goal is not enough. So, what should be the end goal? Okay? Like, if I had learned about these two things back then, about assets and liabilities early on, I would have prevented myself from buying a lot of stupid stuff. But anyways, and so after you save, I think the end goal would be trying to buy assets. And in a quick definition for assets and liabilities, anything that puts money in your pocket, that's an asset. Anything that takes out money or cost you money, that's a liability. And this is a hot take. The car that you drive and the house that you live in, those are liabilities. Yes, they remove money, they cost you money. Okay, drop it in the comment if you disagree. Let me know how you feel about that. I know it's a hot take, so let's see how other people react to that, and how do they see the house that you live in and the car that you drive. Okay, so learn how to buy assets and liabilities with the money that you saved, because if you start investing or buying assets early on in life, the compound effect, like it has been studied that if you start buying early assets, if you start buying assets early, you would beat anybody that's trying to catch up to you when they're like older. So if the 18 years old me bought assets back then, the 25 years old, the 27 years old, the 30 years old, the 40 years old, the 50 years old me will not even be able to catch up, even if we put more monies into it. I do not know. I think there was a really good example of that with figures and numbers. I will try to link it on the video or snap it on the video. So yeah, assets and liabilities. You should learn how to buy assets and reduce, or at least minimize, acquiring liabilities. And by definition, liabilities are anything that costs you money. And unless the car that you drive is used for business or you made it into a rental car and it generates income, or the house that you are living in, you made it into a rental property, or you rented a room and it generates income, or it produces income. Those things are liabilities, in my opinion. And one of the best example of assets for me is stocks. This is what I'm currently doing right now. I'm buying and investing stocks. Those are the money that I saved. So I'm currently buying the assets that I think would produce, and I believe that would produce income for me. Okay, so let's continue buying those assets. We stopped at Microsoft. Next, we would invest in Berkshire Hathaway. Okay. We still have $25 on our available trading budget. Okay. For Berkshire Hathaway, I'm gonna put $10.95. That is 0.023 shares, 23 shares of Berkshire Hathaway. Next, and the last company on our list is Amazon, which is also one of the companies that I'm trying to build, or one of the companies that I'm trying to increase my position. And we have $15.02. Going to buy $15.02 of Amazon. And that is about 0.061 shares of Amazon. All right. That $100 that I just put to my portfolio, like what I mentioned before, that $100 would push the portfolio up, and it would increase the dividends that is coming into my portfolio. I think that's the closest thing that you could get for, like, getting yourself paid while you sleep. Those dividends that you will receive, and that price appreciation that you will receive will compound, will improve, or will increase your gains every time. So that's how powerful owning assets are. And that came from the savings that you started, and you didn't end on just saving or keeping that money or buying something or buying a liability. You invest it. And by investing it, you make your money work for you. You earn money while you sleep. So, if you get value in this video, don't forget to hit the like button and subscribe. It's free, and it will definitely help my channel. Have a great day, and peace.